super excited. How are you doing? You're welcome to today's episode on how to become a consistent trader. Really excited. If this is your first time coming to this channel, you want to click on the subscriber button so that you can get the best whenever we upload. Guys, all you need to do is to make sure you click on the notification bell so you will not miss out in the next episode. Today, we are dealing with supply and demand part 2. Okay? And come on, guys, if you've not watched part 1, make sure you go watch part 1. You will be grateful you did. Okay? So, in part 1, I showed you guys the 2 types of supply and demand. And we have the swing. We have the swing. And we have the CP, which is the continuation. The swing has peak and valley, and the continuation has a rally-based drop or a drop-based rally. So I was able to establish swing at the last session, and today we're going to be majoring on continuation pattern. I told you the last session that you will love it more when you see when you stick to trading swing, okay? However, CPs are also very, very powerful. Okay, so what are CPs? CPs, the meaning of CP is called continuation pattern. It means that a trend has been initiated, okay? A trend has been initiated, and because that trend is currently running, we can now trade the pair. Okay, good. So what forms a continuation pattern? We have CP for demand and we have CP for supply. Now, CP for demand is what we call a rally, which is a bullish candle, a base, which could be any color, then a rally, which means rally, base, rally. Good. So you see this often on a uptrend. Okay. Then we also have supply, which is drop, which is a bearish candle, a base candle, and a drop. So like I shared with you in the first session, in the first episode on this, our entry will be here on this base, which is rally, base, rally. It means bullish candle, a base candle, and a bullish candle. So what do we see? We want to see the market retrace back into this demand zone, then we'll buy. So we are actually going to be trading the base. So likewise for supply, you want to see a drop, a base, a drop, which is a bearish candle, okay, a base and a bearish candle, okay. And this bearish candle, I told you the other time that it can be any color. So the base can be any color. So to trade it, you want to highlight the zone and let the market go down and retrace back into it. So this is how supply and demand continuation pattern works. So your entry will be here, which is the distal line. Your stop loss will be here, which is your proximal line. And for a sell, it will be other way around. The first line will be your proximal line, and your stop loss will be your distal line. Okay, so you want to let the market come back here for you to be able to take the trade, and you're good to go. So as usual, let's get to the board and see what we are talking about. So the market is already on a uptrend here, and we can see that it's creating more highs. And as much as it's creating more highs, we're going to be looking for a what? We're going to be looking for CPs. Okay, so what are CPs? You can see that you have a rally based rally. So this becomes, let me zoom it out better. So this becomes, this is a rally based rally. So this becomes your demand for you to buy. This is another rally based rally. This becomes another demand for you to buy. This is rally based rally with several days. Okay, the market didn't come here. It went up, pushed up more, and it created another rally based rally. And this became the demand again. So you can see how the market comes into those zones, because that is where the institutions, the banks, has their pending order. So this will be your entry price, this will be your stop loss. This will be your entry price, this will be your stop loss. So this is how to identify supply and demand for a continuation pattern for supply and demand. And once you get this, you're going to be good to go. So all you need to do, you can see it, rally based rally. This is your first demand. The market bounced off it and went up. Rally based rally, this is the second demand. The market bounced on it, went up. This is rally based rally. So you can see how the market is obeying it, okay, and it's going up. So until it change into a sell opportunity. So let's look for this a sell scenario. Fantastic. So we have a drop based drop. This become your sell zone. The market came into it and dropped. A drop based drop. The market came into it and drop. So that is how a drop based drop, the market came into it and it dropped. So this is how to trade drop based drop. You must make sure it's in a trend and you can leverage on that. And I hope this helped. Okay, so go to your chart, practice continuation pattern, repeat it over and over again, and you're going to be good to go. Don't forget to subscribe to this channel, be a blessing to someone, share, and I'll see you in the next episode. My name remains Mayowa. Peace out, guys. Talk to you soon.